If you were born in the 1940s, the 1950s, or the 1960s, I need you to stay with me for the next several minutes because the Social Security rules that apply to someone born in 1948 are not the same rules that apply to someone born in 1955, and they're different again for someone born in 1963. The changes that took effect in 2026 did not hit all three groups equally, and that's exactly why most general Social Security videos aren't giving you the full picture. This video is going to walk through what 2026 means specifically for your birth group, what action each group needs to take, and what happens to your monthly payment if you simply do nothing. My name is Mason Parker. For over a decade, I've studied retirement benefits, senior tax programs, and the financial rules that cost seniors thousands of dollars every year, simply because nobody sat them down and explained what applied specifically to them. Now, let me lay the foundation before we go, group by group, because this one table changes how you read everything else in this video. Your full retirement age is the anchor for every calculation that follows. Here's where each birth year lands. Born 1943 through 1954, your full retirement age is 66 exactly. Born 1955, 66 and 2 months. Born 1956, 66 and 4 months. Born 1957, 66 and 6 months. Born 1958, 66 and 8 months. Born 1959, 66 and 10 months. And if you were born in 1960 or any year after, your full retirement age is 67 exactly. That's now final. The 4-year gradual increase that began with the 1983 Social Security amendments is complete. 3 things I want you to hold on to through this whole video. First, claiming before your full retirement age produces a permanent monthly reduction that never adjusts back. Second, every year you delay past full retirement age, up to age 70, adds 8% permanently. Third, the SSA processes whatever you submit without volunteering a full dollar comparison of your options, unless you specifically ask for it. 3 groups. Let's start with the oldest. Born in the 1940s. If you were born in the 1940s, you're somewhere between 77 and 86 years old. You've been collecting Social Security anywhere from 7 to 23 years, depending on when you originally filed. And the 3 issues I'm about to cover are the ones most likely quietly affecting your check right now, without your knowledge. The Social Security Fairness Act eliminated the windfall elimination provision and the government pension offset, retroactive to January 2024. By mid-2025, the SSA had distributed over $17 billion to more than 3 million people, but a significant number of seniors in this birth group still haven't received their correction, and the reason is more straightforward than you'd expect. Many seniors born in the 1940s have moved since they originally filed and never updated their mailing address with the SSA. Correction notices go to the address on file. If that address isn't current, the notice ends up somewhere else, and the response window quietly runs out while you're still waiting for something that already came and went. What to do? Call the SSA at 1-800-772-1213 and say exactly this. I want to verify whether my account has been fully corrected under the Social Security Fairness Act for WEP or GPO, and whether any notices were sent to an address that may no longer be current. If a notice went to an old address, ask for it to be reissued to your current one, with your response window starting from the newly issued date. Also log into ssa.gov and update your contact information directly if you've moved since filing. People born in the 1940s built their careers in an era when payroll was processed by hand. A business owner with a ledger, a bookkeeper with a typewriter. Wages reported to the SSA in the 1960s and 70s went in manually, and honest mistakes in those submissions were far more common than they are today. Social Security calculates your benefit from your 35 highest earning years. 1 year on your record showing 0 when you were actually working drags your entire average down. According to SSA data, a single year of missing or inaccurate earnings reduces your monthly benefit by roughly $100. Over a 20-year retirement, that one wrong year costs $24,000. If 2 or 3 years are off, that multiplies. The SSA doesn't correct these errors on your behalf. There's no automatic review. The error just sits there, silently reducing every check until you personally open the statement and look. There's one issue that hits women in this birth group harder than anyone else. Women born in the 1940s who changed their name at marriage and didn't immediately update it. With the SSA often have early career earnings recorded under a maiden name that never got correctly linked to their current Social Security number. Decades of work from the 1960s may be sitting in the SSA system, credited to nobody. A wage trace investigation can be requested directly from the SSA at no cost. Log into ssa.gov and open your earnings history. Go through it year by year, looking for zeros or low figures in years you know you were working, especially through the 60s and 70s. If you find a discrepancy, the correction form is SSA 7008. It has to be mailed or hand-delivered to your local SSA office. It can't be filed online. Sign it in ink before mailing. An unsigned form is treated as if it was never filed. Many widows and widowers in their late 70s and 80s are collecting their own Social Security benefit when the survivor benefit on their late spouse's record would actually be significantly higher. A survivor benefit can be up to 100% of what the deceased spouse was receiving. If you've never specifically asked the SSA to compare both figures, that comparison has simply never been made on your behalf. Call 1-800-77-21213 and ask them to pull both your own benefit and any survivor benefit you qualify for, and tell you which one pays more. That call is free, and it's added hundreds of dollars a month to the checks of seniors who'd been collecting the lower amount for years, simply because nobody ever ran the comparison. If your late spouse worked in public service and their benefit was previously reduced by the windfall elimination provision, the recalculation under the Fairness Act may have changed the base used to calculate your survivor benefit. Ask the SSA specifically whether your survivor benefit reflects the updated Post-Fairness Act figures. If you've never checked your earnings record year by year, there's a real chance an error from the manual payroll era is quietly reducing your monthly check right now, and has been for years. Every step to find it, including the free IRS tool that retrieves records going back to 1978, even with no paperwork left, is documented in the Senior Money Defense Playbook. The link's in the description below. Born in the 1950s. If you were born in the 1950s, you're somewhere between 67 and 76 years old. Some of you have been collecting Social Security for years, some filed recently, and some are still actively deciding when and how to claim. All three situations have something specific and actionable happening in 2026 that I want to make sure you understand before this month is out. The 1950s birth group spans a range of full retirement ages, and the specific month matters more than most people in this group realize. Born between 1943 and 1954, full retirement age is 66 exactly. Born 1955, 66 and 2 months. 1956, 66 and 4 months. 1957, 66 and 6 months. 1958, 66 and 8 months. 1959, 66 and 10 months. Here's why the month matters. A senior born in 1957, whose full retirement age was 66 and 6 months, who filed the month they turned 66, took a permanent reduction of about 3.3% on a $2,500 monthly benefit. That's $82.50 less every single month, permanently. $990 a year. Nearly $20,000 over a 20-year retirement. Not because they filed years early, because they filed 6 months before their actual full retirement age and never knew the difference. If you filed at or near 66 and were born between 1955 and 1959, pull your original Social Security award letter and confirm the exact claiming age recorded on it. If you filed before your specific full retirement age, even by a few months, your benefit carries a small but permanent reduction that's been compounding in lost income ever since. If you worked in public sector employment at any point, a state or local government job, a public school system, a federal agency before 1984, or any employer that didn't withhold Social Security taxes from your paycheck, your benefit may have been reduced by the windfall elimination provision or eliminated by the government pension offset. The Fairness Act eliminated both, retroactive to January 2024. For most people in this birth group already receiving a reduced benefit, the correction processed automatically. But a meaningful number of 1950s seniors have a payment sitting in a processing queue right now that hasn't been released. The reason is often simpler than people expect. Before the SSA releases a recalculated benefit or a retroactive payment, they need confirmed banking information. If your direct deposit details change in the last 2 or 3 years, or you just haven't verified them recently, your payment may be stuck, waiting on a confirmation step nobody's reached out to tell you about. Call 1-800-772-1213 and ask 3 specific questions. Is there a pending WEP or GPO recalculation on my account? Has a retroactive payment been calculated for me? And is the direct deposit information currently on file confirmed and up to date for releasing any pending payment? That one call could release a payment that's been sitting in a queue for months. Retroactive payments for people affected by both WEP and GPO are averaging between $4,000 and $8,500, depending on how long the reduction was in place. If you claim Social Security before your full retirement age and you're now past it, there's an option available that most seniors in this group never hear about: voluntary suspension. Once you've reached full retirement age, you can ask the SSA to suspend your benefit. During suspension, you earn delayed retirement credits at 8% a year. Every year you suspend up to age 70 adds 8% permanently to your monthly amount once it resumes. A senior who claimed at 62 and is now 68 with a current monthly benefit of $1,500, who suspends for 2 years until age 70, adds 16% to that amount. The benefit resumes at $1,740 a month. That's $240 more every month permanently. The cost is the payments you give up during suspension. Whether it makes sense depends on your health, your other income, and how much you rely on that monthly payment during the suspension period. One critical warning before requesting suspension: during voluntary suspension, any benefit someone else is receiving on your record, including a spouse, is also suspended for that same period. Factor that into the household decision before making the call. If you're still working while collecting Social Security before your full retirement age, the 2026 earnings limit below FRA is $24,480. For every $2 you earn above that, $1 in benefits is withheld. But that withheld money isn't gone. Once you reach full retirement age, the SSA recalculates your benefit upward to credit you for every month benefits were withheld. The earnings test isn't a penalty. It's a deferral. Understanding that distinction changes how you think about working while collecting. The claiming decision and the tax calculation that follows it are 2 separate things most seniors never run side by side. Whether the IRS taxes your benefit and how much depends on a provisional income formula most financial advisors never present alongside the claiming timeline. The Senior Money Defense Playbook has a 5-step worksheet covering both the claiming math and the tax math in one place. The link's in the description below. This is the section I told you to stay for at the beginning. Born in the 1960s. If you were born in the 1960s, you're somewhere between 61 and 66 years old. You're either approaching Social Security eligibility for the first time, actively making the claiming decision right now, or you filed recently enough that the decision is still worth revisiting. All three situations have something specific happening in 2026, with permanent consequences if you get it wrong. If you were born in 1960 or any year after, your full retirement age is exactly 67. This is the final step in a 42-year gradual increase that began with the 1983 Social Security amendments. No more months being added, no more incremental adjustments. For your entire birth group, the number is 67, and it's not changing. This matters because every calculation your Social Security decision hinges on is anchored to that number. The permanent reduction for claiming early is measured from 67. The delayed retirement credit for waiting past 67 is measured from 67. And the survivor benefit your spouse would inherit is based on what you locked in relative to 67. Here's what the numbers actually look like in 2026 for this birth group. The maximum monthly benefit at full retirement age is $4,152. At age 62, the earliest possible claim, the maximum drops to $2,969, a permanent 30% reduction applying every month for the rest of your life. At age 70, the maximum rises to $5,181, 24% above the full retirement age amount, also permanent, on a more typical full retirement age benefit of $2,000 a month. Claiming at 62 produces $1,400. Waiting until 70 produces $2,480. The monthly difference is $1,080. Over 20 years of retirement, that difference adds up to $259,200. The SSA will process your application at 62 without putting those numbers side by side for you, unless you specifically ask for the comparison before signing. Many people born in the 1960s who are weighing claiming at 62 or 63 are still working, and this is where misunderstanding the earnings test costs people money in two different directions. The 2026 earnings limit for someone collecting before full retirement age is $24,480 a year. For every $2 earned above that, $1 in benefits is withheld. In the calendar year you reach full retirement age, the limit rises to $65,160, and the withholding drops to $1 for every $3 earned above the limit. Here's what most seniors in this group never hear. The withheld money isn't gone. Once you reach full retirement age at 67, the SSA recalculates your benefit upward to credit you for every month benefits were withheld. The earnings test is a deferral, not a penalty. You get those months back as a permanently higher monthly check after 67. Practically, that means a senior born in 1963 who's still earning $60,000 a year, and considering claiming at 62 is in the worst possible position. They'd take a permanently reduced benefit that's then further reduced by the earnings test, and while they'd eventually recover the withheld portion after 67, they'd never recover the permanent early claiming reduction. In almost every case where someone in the 1960s group is still working full-time with meaningful income, waiting to claim produces a significantly better outcome than filing early and losing ground on two fronts at once. For married couples where one or both spouses were born in the 1960s, the claiming decision isn't just about the filer's own income, it's about what the surviving spouse receives after the higher earner passes away. When the higher earning spouse dies, the surviving spouse gets whichever monthly benefit is larger, their own or the deceased spouse's full benefit. Whatever the higher earner locked in at their claiming age is what the survivor inherits. A higher earning spouse born in 1962 who claims at 62 and locks in $1,400 a month, leaves a surviving spouse with a $1,400 survivor benefit. The same spouse waiting until 70 leaves the surviving spouse with $2,480. That difference follows the survivor for the rest of their life, potentially decades of widowhood. For couples where one spouse is healthier, has a higher earning record, and is the same age or younger, that spouse delaying to 70 may be the single most valuable financial decision the household can make. If you filed for Social Security within the last 12 months and you're now rethinking that decision, one option still exists. Form SSA-521, Request for Withdrawal of Application. You repay every dollar you received, including any Medicare premiums withheld, and the application is reversed completely. The SSA treats you as if you never filed. You can then reapply later and lock in a permanently higher amount. This option expires exactly 12 months from your original application date and is available once in a lifetime. If you filed recently and have any second thoughts about the claiming age you chose, call 1-800-772-1213 this week and ask about Form SSA-521 before the window closes on your specific application. Let me bring all three groups together with one clear action list. Everything on this list is free. Everything is based on rules already in effect. And for the 1960s group especially, some of these actions have a closing window that doesn't reopen. If you were born in the 1940s, call 1-800-772-1213 this week and confirm your mailing address on file with the SSA is accurate. If you've moved at all since filing, update it today. Ask the representative directly whether any Fairness Act correction notice was sent to an outdated address and request reissuance if needed. Log into ssa.gov and open your earnings history. Go through it year by year against whatever records you have, looking for zeros or low figures in years you know you were working, especially the 60s and 70s. If you find a discrepancy, request Form SSA 7008 from the SSA, complete it, sign it in ink, and mail it by certified mail to your local SSA office. If you're a widow or widower, call the SSA and ask them to compare your own monthly benefit against any survivor benefit you qualify for, and ask specifically whether your survivor benefit reflects the updated Post-Fairness Act figures if your spouse worked in public service. That comparison is free and has added hundreds of dollars a month to checks of seniors who simply never asked. If you were born in the 1950s, if you worked in public sector employment at any point, call 1-800-772-1213 and ask, in this order, is there a pending WEP or GPO recalculation on my account? Has a retroactive payment been calculated for me? And is the direct deposit information on file confirmed and current for releasing any pending payment? If you claim Social Security before your full retirement age and you're now past it, ask the SSA about voluntary suspension and run the break-even calculation before deciding. And if you're working while collecting before full retirement age, remember that withheld earnings under the earnings test come back as a permanently higher check after you reach FRA. If you were born in the 1960s, before you file or before making any final decision on your claiming age, call 1-800-772-1213 and ask the SSA for three specific figures: your estimated benefit at 62, your estimated benefit at your full retirement age of 67, and your estimated benefit at 70. With those three numbers, calculate the monthly difference between 62 and 70 and multiply by 240. That's the 20-year lifetime gap your claiming decision creates. If you're still working with meaningful income, run the earnings test calculation before filing early. In most cases, where income exceeds $24,480, waiting produces a significantly better outcome than filing early and losing ground on two fronts at once. If you filed within the last 12 months and have second thoughts about your claiming age, call the SSA this week and ask about Form SSA-521. That withdrawal window closes exactly 12 months from your original application date, and it does not reopen. 3 birth groups, 3 different sets of rules, 3 different actions that need to happen now, not later. The SSA processes what you submit. It pays what's claimed. It does not call to tell you a Fairness Act correction notice went to an old address, that a retroactive payment is sitting in a queue waiting on a confirmation step, or that the benefit you locked in at 62 will cost you $259,200 over 20 years compared to waiting until 70. That gap between what the system does automatically and what it explains voluntarily is exactly where the money gets lost. You now know which group you're in and exactly what applies to you. The action steps above are what turn that knowledge into a bigger monthly check. I want to speak directly to everyone watching who realized somewhere in this video that they've been leaving money on the table, a correction notice they never received, a retroactive payment sitting unclaimed, a claiming decision made at 62 without anyone ever showing them the lifetime dollar math first. If that's you, the next step isn't another video. It's having every rule, every form, every phone number, and every deadline in one place, so you can act on it today instead of losing another month. That's exactly what I built the Senior Money Defense Playbook for. It covers the earnings record correction process with Form SSA 7008 in full detail. It covers the survivor benefit comparison and exactly how to request it. It covers the provisional income formula that determines whether your Social Security is even being taxed correctly. It covers the W-4V fix, the IRMA, a surcharge you can stop with one form, the joint account mistake most seniors make out of love, and 6 other rules affecting your money right now in 2026. Plain English, every form named, every phone number listed, every deadline marked. If even one chapter recovers a single month of a benefit correction you were owed, the guide has paid for itself many times over. The link is in the description below this video and in the channel bio. Get it today, not this weekend, today, because 2 of the deadlines inside it are closing this calendar year. Subscribe and turn on the notification bell. Every Social Security rule change, every correction window, every deadline affecting your payment. This channel covers it in plain language before it costs you. Share this video with one person in your household or extended family born in any of these 3 decades. The conversation you start by sharing this could be worth thousands of dollars to someone you love. I'll see you in the next one.